If the unfortunate has happened and your vehicle was stolen, what options do you have and what's the process that you have to go through? Let's start off with what is required. If your car is stolen in the majority of states, and I would fair to say almost every state, the insurance company has 30 days to wait. So they're going to wait to see if the car is found from the date that you report it stolen and you filed the police report. No one's going out with pitchforks and looking for your car, but if the police happen to find it on a traffic stop or something's happening, and as we picture it in the movies, it's burning down next to the bridge by the sewer, and that's not usually the case. Most of the time people take the car, it's a joyride, they leave it somewhere, and then it's just found. It gets a ticket, it's towed, whatever that case is, your insurance can wait 30 days to kick in and start making that payment. Now, after that 30 days, they have to process the payments going towards the vehicle. Here's where it starts to get a little bit tricky because there's a lot of in-betweens that have already happened and that will happen. The previous that will already have happened is you call your insurance company. You file the claim and let them know that your vehicle was stolen. They're going to ask you a handful of questions because they do want to know, is this real? Is this fraud? Is this negligent? Did you leave the keys in it with it running outside of the dangerous neighborhood? That scenario, they've got to understand those pieces and know who's actually liable for this issue. If you have the right coverage, and that coverage is called full coverage, which is collision, and comprehensive. Comprehensive is going to cover the theft. The comprehensive, you're going to have your deductible in the scenario that they do pay you on the vehicle. Everything's happened, you went through the claim process, it's been past 30 days, the company is starting to issue that payment. What you're going to expect is something called ACV, that's actual cash value. That means your car is worth whatever it is today, not yesterday, not last week, not last month, and they're going to deteriorate over time. So if I bought a 2026 whatever and it was worth $40,000, the moment I drive off that lot, it's probably worth 35 or less. Now, a couple years hit later, and maybe it's worth 22,000. So that $40,000, I might have a loan for 30, but it's only worth 22. The insurance is only going to pay you what it's worth at the time of the claim. In this case, that lost car, stolen car, is $22,000. Okay, but what if in that 30-day process they find the car? They're going to give you back the car most of the time. Once again, it's up to the insurance company to decide what's worth fixing and what's worth paying for. They technically have the right to purchase the car because a claim has been filed, and if they say, oh, there's smoke in it, someone did this in it, it's too much damage, it's going to cost us this much to fix it. Commonly, if it's more than 75% of the value of the car, they're just going to give you a check. They'll just pay you that actual cash value amount, and you're all set to go. Now, asterisk there, I know some people might put in the comments, what if I have an agreed policy? There is an optional agreed value policy, but I don't know many companies that even do it. Unless you have a classic type car or an older car that has a agreed value or a higher value, like it was 2,000 back in 1920, and now it's worth 40, 50,000 today because of the value or the rarity of the vehicle. That's a different story. We're talking about your general auto policy. I'm buying a 2022 Honda Odyssey, and that Honda Odyssey 5 years later is worth less than what I paid for it. So in that scenario, if that actual cash value is less or more than that 75%, they're either going to write you that check or fix the vehicle and give you the vehicle back. Now, they're going to give you the vehicle back either way. They'll just say it's at X, Y, and Z shop. You have to go get it, figure it out, get it repaired, all of those things. That's on you. You're the manager of this business proposal. It's your car, your risk. Even though they'll pay for it, it's still up to you to do it in most scenarios. Now, what a lot of insurance companies have learned to do is they'll just tow it to a shop that they know can fix it, and they'll still give you the choice, but if it's already there, you might as well fix it, plus I usually get a warranty with it, and yeah, sure, why not? Unless you have a specific mechanic that you want to look at it as well. The thing that you have to be careful with is, what I see the most common is smoke. When someone doesn't smoke and their car is stolen, a lot of the times, at least the ones I've handled, there have been smokers in the car heavily. And when they get the car back, it just reeks of smoke. It's very difficult to get the smell of smoke and cigarette and whatever they did in the car out. If that's the case, just know that it's going to be a headache. It's something that you may have to bring back to a shop several different times. And in the several different times I've done it, they've eventually just threw their hands up and said, you can't get the smell out. I can't take this. And there's nothing that they can do at the end of it as long as they've shown and proven. That's where you honestly have to hire a lawyer and figure it out from there, because the insurance companies, at least in the majority of cases I've seen, won't necessarily go past a couple times of them trying to remove the smoke. And it's not worth it for them, even if they ripped out the whole interior and replaced it, to total the car. So they're not going to write you a check either. And it doesn't make sense for them to replace the innards of the vehicle. So you're at one of those lost points to where it's probably going to have to get more of legal advice than it is if you can't go further with that claim. Okay, so like we said, what if they find the car? We just explained some scenarios that I've come across, but what if they found the car and it is totaled and they're gonna damage it? Can I choose to keep the car? Do I have that option? You don't. If they total it, they're just gonna write you the check. Now, in a lot of cases, they'll let you buy the car back at a really low price, so it makes sense and actually is almost an investment, because now you can buy the car back. It probably has a salvage title because they probably totaled it out, not always, but most of the time. But now you've got that option, right? So you can go to the place where they sell it, or you can go to them directly, and usually you can purchase it back yourself. That's pretty much the cut and dry of it. It's really a lot of optional pieces, but it's really a clean flow. Car stolen, there's 30-day window. If you don't find it in that 30-day window, minus your deductible, you're going to have the coverage paid for as you've contracted, and then that's it. You go buy another car. The part that a lot of people get hung up on, like we said, the smoke and all that, but the other part is the actual cash value. A lot of people have to fight that because they do see a higher value in their car. The only way to win something like that is to go a little bit more in depth and do your own research. I can't give you that answer either. You really just have to start looking online locally to find out what exactly your car was worth with as much or as exact as you can get trim. So if it had the leather interior, if it had a car alarm, if it had this detection device, this alarm system, these tires, these rims, this upgrade, right? If you have all those, then you can show pieces and reasons that they would pay for it more. It is a fight, and I've done it and won myself for my own car, and it was a small $400 claim that I wanted $400 more because of an alarm, and the next model that had that alarm that I installed was X amount thousand more. I just wanted the cost of the alarm. I didn't want to deal with taking out of the car and all that stuff. In that case, I provided the documentation to show them, yes, I agree with your modeling, but we're looking at that car in these lots, and here's what I'm looking at. I know Auto Trader or NADA or Kelley Blue Book or whoever they're using, most commonly NADA, whoever they're using to value the car, I have a higher value because I've upgraded it. Now, there is a limit to that because you can't just go put special rims on it. You can't put a super high-end stereo. You can, but the insurance isn't necessarily going to cover it. There's limits that they set. And commonly when you go over $1,500 of additional accessories, that's different. So you've got to allow them to understand that those are additional. A lot of times they'll cover that part, but then if you go beyond that, unless it's a modification or something that made it to the next trim model, then they'll start looking at that next trim model. Once again, it's a little bit of an argument there, but going back and forth, it makes sense if you have done enough to make the car worth a little bit more. Hopefully it was helpful. Let me know your stories in the comments below. I'd be interested to see if you were taken care of in that scenario or if you had a bad experience. I'm Mark with Think Insurance. I'll see you in the next one.